it is time. I mean, this is going to be the most powerful movement, both in terms of people, volume, value, that we've seen so far. And each successive one will get bigger. That's the law of large numbers. But this one's going to be powerful. And they're coming. Everybody's coming.
Morgan Creek Capital's Mark Yusko gives us his update for the crypto market and why we're going to see a massive $300 billion pour into Bitcoin in the coming months. Yusko explains that while speculators initially drive price movements, giants like BlackRock have entered the market and shifted the cycle by pushing prices beyond fair value, resulting in the crashes we've seen. He also points out that historical trends indicate a parabolic increase in market cap in the coming months, as we near the Bitcoin halving in March of 2024. With real money now flowing in, Yusko emphasizes that the crypto market has become more significant than ever, and institutional investors are driving the price of cryptocurrency in such a way that even 1 to 3% of a portfolio will have massive gains in the next 6 months. Let's get right into the latest interview with Mark Yusko, as he gives his prediction for Bitcoin and the crypto market in the last quarter of 2023.
First couple weeks of January, kind of the kickoff for our London event. BlackRock ETF is going to get approved. Hundreds, plural, hundreds of billions of dollars are going to go into Bitcoin. And that's going to trickle down through the ecosystem, and the digital age will be here. And the thing about it is, we've been talking about this, right? 2024 is the 14-year cycle. And it's only 6 weeks away. I mean, we are 6 weeks away from the beginning of this powerful 14-year tech cycle with, blockchain at the core. And I'm super psyched. I said at this conference in New York, and it's like making the rounds on Twitter, I said, look, there's actually a chance. They quoted me as saying it will definitely happen. I said, there's actually a chance that Bitcoin could become the base settlement layer for all global assets. Right? And everybody's like, and then there's other people, of course. That's what we've been saying all along. Well, maybe not, but okay. But here's the thing. People who are, ETH heads are like, no, there's more transactions on ETH. I'm like, that's not what I said. I said the ultimate settlement layer for the highest quality assets likely will be the highest quality chain. How do you judge quality? I don't know. Uptime, lack of hacks, security. Okay. So you can make a case for both, but at the end of the day, what I see happening is the highest value digital assets are migrating toward Bitcoin. That's interesting. And it doesn't mean you can't have, to your point, other systems that do other things and even have monetary use cases, but they won't be money. Like if you believe, as I do, that Bitcoin has won the war for digital gold, right? That it is a better form of gold. It's equally scarce and more divisible and more portable. And therefore it will replace gold as that base layer. Then we can abstract all we want on top of it. And it's not going to be without a fight, right?
Embracing an unyielding enthusiasm for the crypto realm, Yusko confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Yusko reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin.
You and I have been talking about this literally for a year, and we said that, that inflation that everybody was worried about actually wasn't inflation. My view has always been it's never been inflation. It's never been excess demand for limited supply of goods. It was always currency devaluation, which caused oil prices to rise, and the lockdown, horrible policy decisions, which messed up the supply chain, which made used car prices go up for a short period of time. All of that is now gone the other way, and we're back to where we were. And yet the market reacts to it like it's some massive amount of good news. And, I think we're up 10% plus in November here in equity markets. Now, I'll explain why that is. And again, we talked about this a few weeks ago. It isn't inflation. It isn't anything other than the November effect, which used to be called the January effect. And it's the fact that, people sell all their bad stuff in October. When I say people, meaning the mutual funds, they have to sell before October 31st for their fiscal year. And then they have to wait 30 days to buy it back. So that's been moving, or it used to be, right before October 31st. Then it was like October 15th. Then it was like the first couple weeks of October. And so what was happening is there was this rally, then 30 days later in first part of November. And everybody said, oh, it's the Santa Claus rally. It's like, no, it's not the Santa Claus rally. It has nothing to do with Santa Claus. Santa Claus is a mythical person. But this has to do with real people buying real stocks 30 days after they sell them for tax losses. And that's what's happening, I think, in the markets. And there were a lot of people who were short, who got caught offsides, just like the Bitcoin rally. People were short and they got caught offsides. And so we got this big rally. And then they misinterpret this. We're at 3%. And Professor Plum, Mike Green was on a clip I saw on Twitter. It was kind of funny. He's like, people do realize that 3% means prices are still rising, right? They're rising less than they were the month before and 6 months before, but they're still rising, right? I mean, people do understand that, but I guess not. I never like to disagree with Paul. With Paul Tudor. No, with Stan Druckenmiller. He was talking to Paul Tudor Jones, but I just don't like to be on the other side of investment legends, right? But I just vehemently disagree with this whole idea that inflation's going to go to high single digits. Look, I think inflation is driven by working age population growth, and working age population growth stinks. It's headed to sub 1%. The boomers keep aging every day. 10,000 more of us turn 65. I still got a ways to go, but it's going to happen. And that I just think we're going to be much more in a deflationary environment than an inflationary environment. And look, the 2% number, it's just the theft target. There's no normal reason for quote unquote prices to rise just because. Prices should rise when demand exceeds supply. That's economics 101. But this idea that by increasing the money supply and therefore devaluing the currency, because that's all this inflation target really is. It's a devaluation of currency target. And the big spike and the expectations lag the reality. So these expectations weren't before the Fed printed all the money. It was after the Fed printed all the money. And then magically people were shocked, I tell you, that the prices of things and the quote unquote value of things went up. And we've talked ad nauseum about this. They didn't. My house did not get more valuable. It just didn't. The money got worse. And now, for the first time in 100 years, they're restricting the money supply. They had negative money supply growth for the first time in 100 years.
Yusko anticipates that the crypto summer will continue its scorching run until June of the following year. As we stand on the precipice of fall 2023, merely a month away, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.